Hey guys, this is Tagene of Money Coaching Services, and today we have something for our business owners. Yes, today, business owners, it's all about you. So, we're going to talk about 5 money saving tips for business owners. But before we get into the detail, I'd like you to hit subscribe and hit the notification bell so that you know when we are on. So let's get into the details. So 1, set aside 1% of sales. What that means is that for every sale that you make, set aside 1% and you're going to put that in an account that is separate from your regular general expenses. So it's like a savings account for the business. Now, the reason for doing this is that many business owners forget that there are times that your income or the sales fluctuate. So some months you have a high enough income or sales that can cover all your expenses, plus you have a little extra. So that extra now, at least 1% of your sales, and you can save a little more if you want to, you put that to what we're gonna call your business savings account, right? So set aside 1% of your sales. So that's number 1. Now, business owners, we know that it's tough times now, and COVID is causing a lot of you to be basically stressing. From you go to work, you're stressing. What you need to do is to talk to all the persons that are involved as it relates to the persons who supply you with goods, right? Businesses that provide goods and services to you so that you can operate or function your business properly. So yes, go to your vendors, go to your creditors, negotiate with them. Set aside time so that you can discuss in detail what is the way going forward that your business relationship with them is going to be like, right? Because these are times that it's not normal. So we are not doing anything normal these days thanks to COVID, and because a lot of persons are either jobless, getting half of their salary, or dealing with some kind of illness. So money is being taken away from them in some way, shape, or form. So those persons who would normally come to you and spend, say, 15,000 per month or 20,000 per month or more, are spending half of that, right? And this is now affecting your business. So instead of being the type of person who says, I'm not managing, you have to now start looking at areas where you can talk to your creditors and vendors and say, guys, I need help, right? I need help so that my business can continue running, right? In order for us to keep on buying goods and services from your company, we're gonna need some help. So just sit down with your vendors, have the conversation that is necessary for you to try to maintain some form of stability in your business so that you can continue earning money. Okay, so that's number 2, negotiate with your vendors. Number 3, keep 10% of your annual sales in cash. Wow. The reason for this is that a lot of persons don't realize that cash is king. Cash is king. When you have cash, if a person is selling something for 100,000 and you say to them, I would like to purchase this item, but I have 90,000 in cash. Would you accept that? And most times the person would say yes. The reason for that is because cash is basically the method that we love the most. There is no waiting to get your money. When you get the cash, you can go put it in your bank account, say the business bank account same time, or you can go and put it, start buying things that you need for the business. So this is what it is. Cash is king. So business owners, keep 10% of the amount that you earn in your sales per year in cash, because it allows you the power to negotiate with sales people from other organization, with vendors, whosoever, for you to get products and services that you need to make your business better. Okay. Number 4, cut office expenses. I know a lot of people don't like to hear about cutting this and cutting that, but guess what? We are in a time that we can't be picky. Now is the time for us to focus. List all expenses that you have in your business. When you have listed all your expenses, beside each expense, write if it is an expense that is a one-time expense, an expense that comes up every month. Is it an expense that fluctuates? That means it varies in the amount, right? You need to write these things, because when you write them down, you'll be able to see what are the expenses that are affecting your business and causing you not to have enough cash flow in your business. And cash flow is what's keeping your business alive. Cash flow is the blood in your business. Cash flow is what you need for your business to keep churning, right? Cash flow gives your business energy to continue, energy to surpass the obstacles that you face. So the more cash flow you have, the better off for your business, right? So that is cutting your expenses. Cut out expenses that do not help you to generate or add to any value, product or service that you have. In addition to that, you're going to focus on purchasing items, or yes, for the business that helps you to create more business. What do I mean by that? This means that if you have products in your business that they are selling quickly, do not do like other business owners and buy stuff that are not selling as fast. If you have a product that you buy today and in less than a week that product is sold out, there is where you should be spending most, at least 50% of your assigned amount of money that you have to buy products or services on that product, because it is the one that the customers like. It is the one that the customers are eating up. It is the one that the customers are saying, yes, this is what we like. And their purchasing activity shows you that that is what they want. Stop stocking your business with goods and services that nobody wants. If they're on the shelf for more than 3 months, do not buy any more of it. People do not want it. There are other products that are seasonal, like you have products that are very popular when it is Christmas time or school time. Those you need to focus on separately, but in general, focus on your fast selling products and cut your office expenses. Number 5, take a look at your payables and receivables. Now guys, this is where a lot of business owners and businesses drop the ball. They are not watching the money. You have to watch the money. You have to see how much money is going out. You have to see how much credit you're extending to your customers. You have to set up some limits and some guidelines so that it helps you to once again manage your cash flow, because overextending yourself for receivables is not going to help the business. You have to create some form of credit rating or customer rating to say, okay, this customer has a higher customer rating because they have shopped with us for a long period of time and they have done good business with us. So those persons you can extend credit to. Credit should not be extended to everyone just because they ask for it, right? Credit is something that you have to be careful of, because when these receivables are not paid back to you as the business owner, you the business owner have already given out the product, given the service, and now the business has to pay for that loss. No one has any time for that. Now you have to be holding on to your money. And with the payables account now, so we are shifting from credit, we are going now to payables. Your payables, focus and get your payables on a system. Create a system for your payables where you say, okay, per week we only spend a certain amount on payables. And you look at all the expenses that you have, look at all the vendors and see how many days they have given you to repay them, and then organize your payables in a way that matches with what your vendors are saying. So if they used to say to you, you have to pay us every 14 days, and now they're saying, okay, you can pay us now every 21 days. Do the math and mathematics, that is, and organize your money in a way that you are able to pay back for these goods and services that the business needs. Now, as it relates to your payables, you have to be careful how many inventory or services you are purchasing at any one time, because this is the number one thing that will negatively affect your payables if you are not monitoring how fast you are buying your inventory. And if you buy inventory that is not moving, your payable bill is going to be high and you will not see any profit, because nobody is buying those goods after you purchase them. They're on the shelf for 1 year, 2 years, and you're going to get in trouble for them, right? Nobody wants to buy any old goods, any goods that have expired. So business owners, pay attention to what is happening in your business, and all the best. This is Tagene Brown McBean of Money Coaching Services, and see you next video. Bye.